Have you noticed how early it's getting dark lately here? It's around 7 o'clock. It's almost completely dark, and won't be long here in about another month and a half that will be 5 o'clock will be dark. So that can only mean one thing, and that's that we are now in the fourth quarter of the year, and October is certainly upon us. So um, watch your head going out around the walnut trees because those things are falling. I know by personal experience, and leaves are starting to fall. So, all right, enough of that depressing news. Let's get started with this week's show. Well, here we are, quarter three. We're going to close it out and we're going to find out what September and the third quarter tells us about the real estate market in Des Moines and central Iowa. It was really great this past week. We had Iowa Realtors Fall Convention. Got to see a lot of agents all across the state. And I can tell you one thing, when you talk to agents from other parts of the metro, their markets are totally different in some cases and totally the same in others, but mostly totally different than our market is. There are a lot of markets around the state that are in a buyer's market, and they just can't believe that any market in the cities are even still in a seller's market. So let's see what kind of market we're in here in the Des Moines market and kind of talk a little bit about what happened in September and how the third quarter ended. So let's start off here with the dashboard as we always do. A couple of highlights again. We continue to see a rise in number of homes for sale. We're currently at 4,367. That's great. I want to hit 4,400 so bad. And I think we're heading that direction. That's a 12% inventory increase over the same time last year. And we have increases in the resale properties of 24% in the resale single families and 43% resale condo townhomes. So that's where our growth in inventory is coming from. In fact, we're down 9% in new condo townhomes and 12% in new construction. So that's making up a pretty good difference in our marketplace here, where in previous years we had a lot more new construction on the market competing for the new homes or for the active inventory. One other note I wanted to point out here, this last week was a pretty high week for expired listings. We had 72 homes come off the market that actually expired, and I don't know if that's just a seasonal thing. I don't remember ever seeing the end of September really be that point in time when we see a lot of homes expire, but for whatever reason we're at 72 this week, which is up. We're normally around 25 or 26. And again, interest rates as well, even though there's still a lot of talk about additional rate drops from the Fed. Mortgage interest rates have risen the last 2 weeks, but all very, very slightly. We're still down around 6.34%, and that's a pretty affordable number when you consider we've been closer to 7% here earlier this year and above 7% the previous year. So, we're going to continue to watch this, and hopefully that this little bit of a rise we see right here in September, October starts to go down again here this next week. I purposely left August on at the beginning and August of 2024, so you can see kind of where that downward tip trek was from August through the first part of October, and hopefully we will see that continue downward. This is just maybe a little bit of a blip here. So 6.34%, not a bad number out there for the marketplace. So all right, well, let's see what we got here as far as quarter three. I'm sorry, this is end of month, end of September, homes for sale. You can see we've had inventory on the rise for most of the year here. And this is the number of homes that came onto the market in the month of September. So this isn't the number of homes totally for sale. This is just the number of homes that actually came on the market during the month of September. And we outpaced August by a couple hundred listings. So, August did show to be a pretty slow month for a lot of realtors and a lot of markets out there. So 1,051 is all we brought on last month, and we're already at 1,213 in the month of September. And I know October is already also starting off pretty well. We'll talk about that in the coming weeks here. But this is the third highest month of inventory gains that we've seen. Obviously, April and May are typically the highlights with the spring market, but we had a little bump in July. And then again here now, September at 1,213. That's not a bad number to be looking at as far as the number of homes that went under contract during the month. Now let's go back for just a quick second. We had 1,213 homes come onto the market in the month of September, plus all the other inventory that was on the market. And of all that inventory, we had 1,032 homes go under contract for September. So we are still, this is why we're building inventory. It's not necessarily that we're getting as many homes on the market. We are getting more, but if home sales, if pending sales were on the increase, we would not probably be seeing this increase in inventory levels waiting to be sold. So at 1,032, that's actually our, let's see, there was only two more, yeah, 2 months, that first 2 months of the year, January and February, when we actually had fewer homes going coming under contract in a single month. So we're definitely slowed down a bit. And that's going to show when we look at the months of inventory near the end of the show here. Just looking at the actives and pending side by side, this is just kind of a nice graphic to show you again. The month of September, 1,213 came on, 1,032 are under contract. And so we've got that surplus of inventory that's starting to build. Where the month of August, even though it was slow, it was pretty well balanced. 1,051 came on the market and 1,046 sold. So that's pretty much flat there. But we do like to see our inventory rise as well as pendings, because then that means we have true growth, not just growth based on slower sales there. As far as looking at the same data from a price point outlook, the biggest news here on this month of September is right here, 1,069 homes on the market in that $200,000 to $300,000 price point. That is actually really, really good news. In fact, 624 in the 100 to 200. But it's really nice to see this jump in that $200,000 to $300,000 price point, because these are predominantly going to be single-family resale properties, not new construction. And this is where we really need inventory to start coming on if we're going to have this boost as we move into the last 3 months of the year. We need the lower price inventory to be available for those buyers to, at the very beginning stages, the first-time home buyers and the buyers that are just entering the market, to look in that 200,000 to 300,000 point is good, because then when those homes sell, then we're going to see an increase in the pendings in that 300 to 400 and possibly in that 400 to 500. So again, if we're going to see an increase in inventory, it's good that we're seeing it in that lower price point. So let your buyers know that there's probably more affordable homes out there than they've seen in quite some time at 1,069 in the $200,000 to $300,000 price point. As far as closed sales by month goes, you notice kind of a theme here. We're just looking at units right now. We're going to look at pricing in a minute. We actually have closed fewer homes in the month of September than, and kind of along that same pace that I talked about earlier, January, February, March, we actually closed fewer than this month, but the rest of the year, April through August, we actually closed more homes. And so when I say we had a slow August, this is a product of that slower August. So I'm not terribly surprised that we only had 1,050 closed, because those would have been the ones that went under contract in late July and early August. And we should see a pickup in October, see this number rise in October. And that's what we saw last year with that little tick right there. That indicates last year's numbers. So no surprise in reality that we're at 1,050, but we should expect that to jump back up. And it could be one of our better months in October with closed sales here. As far as year-to-date numbers go, we are currently sitting at the end of September. We're sitting at 10,448 homes closed. And our year end for 2024 was 13,226. We're well on our way to surpassing that. Right now we're ahead by, I want to say, I think we're around 500 homes closed ahead of last year. So that's going to put us, if we can maintain that, it's going to put us at closer to that 13,800 homes. And again, I think I talked a couple weeks ago about how it's really, really possible that we could actually hit 14,000 if the pace picks up. And I really kind of expect that to happen here. As far as looking at the third quarter numbers now. Those were the month of September before. Now let's look at third quarter and compare it all the way back to 2017. The light green columns are first, second, and fourth quarter, and the third column is third quarter for each of those years. We're currently sitting with a total inventory at the end of the third quarter, or the end of September technically, 4,267 homes on the market, and that's by far the most we've seen in the last 7 years there. Yeah, 7. Going back, the closest we came to that was 2019, and as you know, I've been celebrating the fact that we've surpassed 2019 numbers, and the question is going to be how much higher are we going to get when we get to December, or December 31st here. So we traditionally do see a decrease in inventory on that fourth quarter, but this is going to be one of those years that it could be a spoiler and actually give us equal or greater number of homes on the market by the end of the year, which would just set us up perfect for the first of 2026. Looking at the same numbers in the sale pendings category by end of quarters, third quarter shows us at 1,860. That's slightly ahead of 2023. Not as far ahead as we were in 2019, where we had 2,110. So my comparison point prior to COVID is always 2019, and so we're a little bit behind in sale pendings at that point. But again, I think we're setting our stage here for this fourth quarter to be a real good one. Again, you can see that fourth quarter traditionally is where we see a trail off, but if rates continue to come down in this fourth quarter, I think we can see that bump right up there. So as far as closed sales go, homes closed at the end of quarter number 4, we have 4,071. Again, at a slower pace than we were in 2019, but yet we are closing ahead of 2023 and 2024. So those are 2 good benchmark years after COVID, and kind of at the end of the COVID period there that we're outpacing closed sales. Obviously, 2022 was the tail end of the crazy business from 21 and 22. We hit our all-time high, I think, right here in quarter 3 of 2021 with almost 5,300 homes closed in a month. So that's something we probably won't see again, either unless we take on additional market area in our market areas, or something changes in the real estate market and we start to sell a lot more homes. As far as months of inventory, I referred to this earlier. You can see that 4.3 months of inventory in the third quarter. This is the highest we've seen since all the way back prior to 2017. It probably compares a little bit to 2019 at 3.9 months of inventory. But this puts us kind of at the end of the third quarter in a balanced market at 4.3 months of inventory. And that's not a bad place to be, especially when we have buyers out there looking and home sellers, being hopeful out there. So we've got a balanced market. All parties are going to feel pretty good when sales come through. The price point breakdown of that months of inventory. This is again telling you the story. Really, we are in a seller's market all the way up to that $400,000 price point. There's a little bit of a bump from 400 to 500 where it's a balanced market, and then back down to a seller's market again, the 500 to 600, and then you get above that and it's either balanced or a buyer's market throughout the rest of the categories down there. That $800,000 to $900,000 price point, I watch it occasionally. It's kind of like the 900 to $1 million. It can be 9 months one month and 3.2 months the next, just because there's such little inventory. So it doesn't take a lot of sales or a lack of sales, a lot of sales to make those numbers, jumble around there. We always talk about price reductions this year, and at 1,958 price reductions in the month of September. That's the third highest month we've seen. May and July both had more price reductions in those months, and I think that it's common to see the price reductions kind of bump up a little bit as we move into the last quarter. So October, if we hold true to what they did last year, we should see an increase over that. We could actually surpass the number of homes reduced, and of course the price increases there on the very bottom are hardly visible at all. 78 homes had price increases. The one thing we're not seeing this year in the price increases is the builders coming out with maybe some of their latest pricing. Sometimes we typically would see that a couple times a year, maybe 3 times a year, where they adjust their pricing upward based on material costs or next year's prices, things like that. So still, this is what's helping kind of keep our pricing down a little bit, that we're not uh, outpricing the new construction. They've been an important part of our sales this year. As far as the back on market rate, the bomb rate, we're currently sitting at the end of September with 23% of homes falling off the market in that month. And, again, that's kind of our, I think 21 or 22 is kind of our normal. So we're not too far off pace of normal. 234 homes came back on the market in the month of September. And at 23%, that's, almost 1 in 4 homes that went on the market actually came back on. So I always remind agents working with buyers, if you missed out on that one property, there's maybe a 1 in 4 or possibly a 1 in 5 chance that property is going to come back on the market for you. So don't give up watching those. If your buyers haven't found something yet, there's a pretty decent chance that home might come back on the market for them. All right, well, let's shift gears now and talk about pricing. This is the end of quarter median list price for the third quarters of each of the years going back to 2017. I'd like to show this one because, we've really seen 2025 as the year that our list prices finally started to come down. We had been on an increase every year, at least on the third quarter, going back to 2019 when we were at 259,000. And that increased to 272, to 303, to 354.9, to 360, 361 last year. All of these are in the third quarters, and we're now back down to 339, or close to $340,000 on the list price. So I think we finally peaked as far as the rise of high list prices go. It doesn't mean that home sale prices aren't increasing, because I'm going to show you that in a minute. But at least the prices of homes coming on the market are maybe a little bit more realistic and more true to where the market really should be after COVID there. As far as sale pending price, this is the price that the homes were at when they went under contract, not the price that they actually sold for, but this is the price point of the homes selling that at the point in time they were on the market and then accepted an offer. So again, we do see a little bit of an increase at $320,000 for Q3 of this year, $315,000 last year, $300,000 the year before, $285,000. So this is a category that does continue to rise, but not at quite the same pace that we've seen in the last couple of years. So it's very telling that we're going to probably see this number start to either level out or maybe drop as we move into next year. So we'll watch that. As far as closed sale prices, again, this one goes all the way back to 2017, at which point in time we have seen an increase in closed sale price. So these are the actual closed prices. Third quarter has seen an increase every year on third quarter since 2017, starting at that year at 191.5 and ending this year at 305. I want to kind of show you, though, when we get ahead here in a second, I'll show you where we've stayed with that 305 over the months. And we'll kind of start, first of all, talking about that monthly median list price. So again, I said this is the year that median list prices were kind of on the way down. We really peaked around March this year. 360 was our median list price, and we've hit 355 for 2 months in a row, 350 for the month of July, and now we've been down around 340 for August and September. And in fact, we are about $10,000 under the list price than we were back in January at 350. So again, this is driving that feeling that the homes are becoming a little bit more affordable, and the fact we have more homes on the market, the median list price at 339, meaning obviously half the homes on the market are above that 339 and the other half are below. This tells you that there's a lot of inventory out there under that $340,000 price point. Very interesting graphic when we look at sale pendings over the month so far this year. They were pretty on the rise from February to May, but at that point then, from about June on, we've hovered right exactly at that $320,000 price point. 319, 945 in June, and then 320 each month since July. And again, this is why I'm kind of get the feeling that even though last year we saw an increase in the month of October, I think we're going to see the price at pending come down just a little bit, just because we've got that extra amount of inventory out there in the lower price points. So this could help also spur on confidence in home buyers. Now here we are. This is the closed sale pricing, and again, you know, the year started out at $283,000 in January, and it took 38 days on the market in January, which is just, you know, don't worry about the days on market yet too much. But once we got to about May, it was struggling to get between, you know, that 300 and above 305, and currently we're sitting at 305,000 for the median sale price for September, and that's virtually the same as August at 304,990. Not up a whole lot from July, where it was right at 300,000 or 299. So, you know, watch October. Again, I think that we're going to probably see additional sales, and again, with the lower pricing that's maybe coming on the market, this number could start to go down. We still might see this number kind of stay up again just for the month of October, just because of the sales that were in process from August and September. But I almost feel certain we're going to see this price come down as we move into November and December and end the year. This is kind of a cool graphic that I always show, and the reason I really like this last graphic here is that it shows the spread between the list price, the price at pending, and the sale price. And you go all the way back to January, and the sale prices were at 283,000. The list price was at 349,990, and the pending price was right in the middle at 315. And that was a huge spread. I mean, that's 50, 60, $67,000 spread between closed sales and the list price. Today, at the end of September, the sale price is 305 and the list price is 339. We'll just say 340. So instead of being, you know, 60 some $1,000 difference, now we're looking at less than about $35,000 difference there. So and it's, you know, the numbers are coming close together. So that tells us that even though prices are coming down, you know, the sale prices are trying to rise a little bit, but the closer these three get, it's going to be an interesting market, because home buyers and home sellers will be watching that and realizing that maybe homes are selling at their list prices a little bit more. So, all right, gang, that is the end of the show. This has been the end of month, end of quarter 3, and hopefully you've gained some good information from that. If you like what you see on the show, please do me a favor and subscribe to the YouTube channel. We had a nice bump in subscribers this past week. My goal is to hit, you know, that even 1,000 closing or number of subscribers, and we're not too darn far from that. It won't take very much. So if you have not yet subscribed, please do so. And again, if I ever forget to tell you this, always go back to DesMoinesMarketValues.com. You can see all the graphics from this week's show as well as previous weeks, and all the YouTube videos going all the way back to 2020 out there. Do yourself a favor, go back a couple of years in the old video history and look at the previous year's week 40 all the way back to maybe 2020, and kind of see how the market has changed and the outlook has changed from 2020. I did that a couple weeks ago. It's kind of fun to watch that. So anyway, that's the show, guys. Thank you very much for watching, and we will see you all again next week with maybe some information from NAR. So talk to you later, and be safe out there. Enjoy it's going to be warm weather, cold weather, windy weather. It's fall. Who knows? Talk to you later. Bye-bye.